is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Today's August 6th. I'm going to post a video of 3 high-yield insurance stocks. Great dividend history. High-yield insurance stocks. And, of course, I always got a bonus stock at the end. But I'm going to be live tonight from 9 to 10. If you watch this and you are on my notification bell, which I encourage you guys to do, and don't forget to smash that like button. I will be live tonight. We're going to celebrate the 5,000 subscribers. I think that's a big deal. 9 to 10 p.m. So if you are new to this channel, make sure you subscribe and check it out. I'm going to be live. I'm going to have some fun. We're going to talk some dividend stocks for about an hour. And, we'll just talk about future plans with my channel. So let's check these stocks out right now. First dividend stock, which is an insurance stock, is MetLife. Very well-known company. They have a 3.16% dividend yield, a PE ratio of 12.19, market cap of 51.51 billion US dollars. So its range was 35.19 to 67.68, obviously because of the pandemic. This is one that is not keeping up with the S&P in the past 5 years, and it's sitting at $60.71. But what makes this a really incredible stock is what it's all about, and it's insurance. So let's check this out. So these guys have insurance in dental and vision, life insurance, auto and home, and accident and health. So let's think about this. Everybody drives a car. Everybody, needs something with dental and vision. I mean, that is in demand. I probably need to get my eyes checked out. Accident and health, that's important. So with certain insurance, life insurance, that's pretty big. So this is what these guys carry. Now, I'm sure you're getting these calls from salespeople. It could be MetLife to sign up for life insurance or accident and health or dental and vision. I have in the past, but what makes these guys an amazing dividend stock, let me just show you how much revenue they generate. It's crazy. So the revenue is not bad. It's kind of consistent. 2014, 2015, 2016, 2017, 2018, it was going up. 2019, 2020 went down too. But if they're in multiple countries, they have over millions of customers, okay, with MetLife, and they have been there and done that. But what makes them really amazing is their dividend history. So here's on their website, 40 cents, 42 cents, 2017, 1 per 11 spinoff. Very nice. 44, 46, 48. So they're consistently increasing their dividends. They're right at $60. That's not bad. So imagine if you had a lot of shares in these guys. These guys are actually cheaper than Abbvie Realty Corporation, ADC, and they are increasing their dividend, which is very attractive. And look at their trends. They're generating a lot of money. Well-known company, great insurance company. This is something with diversification. And again, none of this is financial advice. This is for entertainment purposes. Disclaimer in the description of the video. But my gosh, what a great dividend stock. 3%, increasing its dividend over time. It's not jumping up too fast, and it's not doing well against the S&P in the past 5 years. Very attractive dividend stock. Let's go to the next one. I actually have this dividend stock in my traditional IRA, a Prudential Financial. So when I had Acorns, I was in their traditional IRA format, and then I threw it into Fidelity, and I have a bunch of shares. I think I had like $1,600 that I had with Acorns, threw it in Prudential Financial, and look, I got a dividend yield of 4.39%. It slowly increased its price per share. Hasn't done well against the S&P. And look at this, a 4.39% dividend yield, market cap of 41.28 billion. Its year range was 60.16 to 109.17. So you're seeing a very good dividend stock, high yield dividend stock. The market cap is 41.28 billion. What do these guys carry that make them a great insurance company stock? We need to look into that. They have based on their website, affordable individual health insurance plans. They have short-term health insurance, life insurance. So that's important. So this one right here, health insurance. Here's health insurance for the unemployed. health insurance for the self-employed. So they have healthcare plans, which is very attractive as a dividend stock, and everybody needs health insurance. It's just how it is. Let's check out their revenue. Okay, so you're seeing a slow increase, 54, 57, 58, 59, 62, 64, 57, kind of a given because of the, you can play the pandemic card, but slowly going up. Gross profit, look at the gross profit, not bad in these, but you're seeing a slow increase in revenue. And again, this is not financial advice, but you see the revenue going up. And right during the time of the pandemic, it kind of stagnant and it didn't go anywhere, but that's kind of a given because of the pandemic. So you're seeing a insurance dividend stock that has increased its dividend history and has done very well as a dividend stock. And I'll show you its dividend history. And this is exactly why I have it in my traditional IRA. Kind of wish I had it in my actual dividend portfolio. But look at this. 70 cents, 75 cents, 90, $1, 110, 115, PE ratio of 5.78, annual dividend of $4.60, 15, 30, 45, 60, $1, 460. Dividend yield 4.6%. So imagine if you had this in a traditional or Roth IRA. These are both really good traditional and Roth IRA stocks as well. So that's why I bought Prudential, threw it in my traditional IRA, going to reinvest the dividends, just leave it alone until I turn 59 or 60 or whatever, and then I have to take it out. So, but that's really exciting. You know, I can maybe throw this into a house payment. There are some loopholes with traditional IRAs. I haven't ruled that out. Could I do something with school? Maybe. I mean, I can with tuition and stuff if I need to. So there's a lot of things I can do, and it's a very small traditional IRA. I kind of wish I would have had a Roth, but it is what it is. There's a lot of things I can do with this stock. I'm probably just going to reinvest, let my net asset value grow, my net worth. Again, when you have a traditional or Roth IRA, your thought process is increasing dividend, stock that has done well against the S&P, increases in price per share over time. And that's what Prudential has done. And actually, this next one has done very well as well. And it's a very good dividend stock. I did discuss this one very, very frequently in the past few months. I have been tweeting about this. And I just absolutely love this dividend stock. It's something that's on my radar, and I'm highly considering buying. Now, I haven't done it yet, but I haven't pulled the trigger, but it may be coming. It may be coming, so don't quote me on that, but I love this stock, and we're going to go to that one right now. And that one is Old Republic International Corporation. This one's sitting at $24.95 with a 3.53% dividend yield. Has not done well against the S&P in the past 5 years. Doesn't look like a pretty good traditional Roth IRA stock. Not compared to Prudential, but look at its year range right here. We're going to check out its dividend history. It's a PE ratio right around 4.72. Let's check out this stock and see what it's about. So their mission is to provide quality insurance security related to service, businesses, individuals, and public institutions, and be a dependable long-term steward of the trust that policyholders, shareholders, and other important stakeholders place in us. So this is very important. It's an insurance company. So, you know, they're one of America's 50th largest shareholder-owned insurance businesses. They're a member of the Fortune 500, is listing as America's largest companies. So think about that. It's that big, and it's that cheap. Let's check out their revenue real quick. And absolutely, this is very attractive. I like the increase in revenue. These guys have a tradition. Just like the other the other two stocks that I mentioned, Prudential, and these guys, they have in MetLife, revenue-wise, they're not doing well. These guys and Prudential are increasing. MetLife, you can see that they're not too bad still, but they have increased their dividend, and they're a huge company. But the revenue in these guys I really like. Now, it's slowly, this is annual data in millions of US dollars, but it's slowly going up, 5, 6, 7. And this is this didn't take a big blow at all, really, during the pandemic. So you're seeing a slow trend that's going up, an increase in revenue. So they're doing something right. That's what I like. Now, I don't like to go into big detail and all this with the stock. I like increase in revenue. These three stocks are in demand. They're increasing their dividends over time, the past 5 years. How can you say no to these? This is why this one's on my radar. Absolutely. And it's cheap, totally cheap. And this is why I absolutely like this one. Now let's jump to its dividend history. Holy cow, do we have a winner. Look, 18 cents, 19. Ooh, a special one with $1. 19 cents, 20, 21, $1 special, 22. It's going up. It's going up, and they have a special dollar. This is crazy. Look at that. They're just dishing it out right there. I mean, I like it. Do they do that every year? I doubt it, but that's something that's special. A PE ratio 4.71, 3.6% dividend yield, $24.94, almost $24.95. Hasn't done well against the S&P. Annual dividend is 88 cents. You're seeing an increase in dividends, and this is a very attractive dividend stock. Let's jump to the wild card one. You may know which insurance company this is. And that stock would be AFLAC. If it looks like a duck, it quacks like a duck. It is AFLAC. And that is a dividend yield of 2.35%. That was probably a terrible impression. So I made to get, make sure you smash that like button. Give me some sympathy right there. So the market cap is $37.72 billion. They're all over the insurance. Nick Saban's on there with AFLAC. I mean, he's all there puffing up AFLAC. They're a well-known company. Their insurance is phenomenal. Let's jump to their revenue, and then we'll jump to their dividend history. Okay, so here's the thing. The revenue is 22, 20, 22, 21, 22. It's slowly trending up. It was a little stagnant, and then it's slowly trending up in the 22s, consistent in the 22s. And it looks like there's an increase in the past few years. So they're doing something right as a insurance company. I have a lot of confidence in these guys. I actually bought them with the dip and sold them. So the only one that I own in all of these, and I'm probably going to say I'm long in, is Prudential. But let me show you the dividend history at AFLAC. They have a great, rich dividend history, a very great reputation with their dividend stock. Let's check that out. They're slowly going up. A PE ratio of 6.79, 2.4% dividend yield, annual $1.32, 26, 27, 28, 33 cents. They have a consistent dividend increase, and they're $56.24, a dividend yield of 2.74. But look, they're not a bad traditional or Roth IRA stock. Now the dividend yield, I like 3 to 5%, but this one was an exception why I bought it, and I got the dip, and I'm like, you know what? Let me just sell it and be a little bit more aggressive. Very well-known stock. Actually, all four of these, which is including my bonus stock, AFLAC, a well-known dividend stock. Many people have it in their portfolio. These four stocks, again, this is not financial advice. This is for entertainment purposes. These four stocks have a very strong tradition in the dividend investing community. Prudential has increased its price per share over time. Very good, attractive stock with a 4% dividend yield. So those stocks are attractive. I absolutely love Prudential. AFLAC I love, but I had to sell it with a dip, and you know what? That's one stock that'll be on my radar because I do need to expand my M1 Finance dividend portfolio to other stocks. And this is a great stock. It helped out with dividends, helped me almost reach that $1,000 goal of earned dividends on M1 Finance. And I can't say I don't like AFLAC. I think it's fantastic. So if you guys are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will see you guys at 9 o'clock p.m. tonight, being live. We're going to celebrate 5,000 subscribers. Make sure you smash that like button. And if you guys watch this video, make sure you jump to 9 o'clock tonight once we go live. So you guys take care and have a great weekend.